Up next, as we mentioned, is a fireside chat with Mahesh Patil, Chief Investment Officer of Aditya Birla Sun Life Mutual Fund, on the takeaways for retail investors from the Union Budget 2022. Mr. Patil, welcome to Nivesh Mahakumbh 2022.
Yeah, hi Gautam.
Hi, Mahesh. Well, as opposed to expectations, the budget did not include a hike in standard deductions for salaried individuals or improvements in deductions for investments. So, I want to get your first thoughts on that.
Yeah, so I think this time around for the finance minister, it was a tough task in terms of trying to balance, right, between the fiscal deficit and how to stimulate the economy, right? Because post COVID, I mean, we had now 1.5 years, almost 2 years post COVID. And initial part, I think we've seen the consumption getting impacted. And we saw in the last budget, there were incentives given, right, in terms of tax deductions to stimulate consumption and increase the income levels. I think this time around, I think considering the fact that the fiscal deficit was also a challenge and there was not much avenues, okay, where they could really spend that. I think the finance minister chose to really stimulate investments, and that's an area where bulk of the spendings have gone. In the view that if you do it around now, then over the next 2 to 3 years, you will see the benefit of that in terms of the economic growth. And overall investments have kind of collapsed over the last 4 5 years, and it was important to continue what they did in the last budget in terms of stimulating domestic manufacturing and going in on that path. So while it was a disappointment for retail investors and individual in terms of reduction in the tax rate or tax slab, but I think you can't actually have a reduction in tax slabs every year, right? And more so, I think the budget is going to be more about tax changes, right? More in terms of policy direction, I think is what we should expect. So yeah, so I think it is stimulating growth, more from longer term growth, I guess. Yeah, I think going forward next year, I think as we move towards elections, general elections, right? Probably it will be trying to probably give more money at the hands of the consumers and stimulate consumption is what my guess would be.
Stimulate consumption. Let's see if that works. Now, one of the most talked about things of the budget was the introduction of the digital rupee and a tax of 30% on the proceeds from sale of cryptocurrencies and other digital assets. So, Mahesh, how will this impact the cryptocurrency investment gamut in India, in your opinion?
So I think for the first time, the in the budget, the finance minister gave a roadmap that they will have a digital, the central bank digital currency, okay, CBDC as they call it, which is not exactly competing with the cryptocurrencies because that is a digital currency which will replace your existing physical cash to some extent, and unlike the cryptocurrency, which is very volatile and speculative, and the prices keep on changing on a daily basis and pretty violently, the digital currency, which will be more substitute of the domestic cash currency, and it will be much more stable. So that is more to do with ease of transactions, trying to because there's a lot of cost which is incurred in terms of printing the physical currency, the notes and the coins, and also from a security purpose, digital currency is probably the future, and that's where the government has taken the initial steps. On the digital assets, the 30% tax is probably to attack the cryptocurrency market because we've seen that government is not so happy with investors speculating in the cryptocurrency market, and we've seen that in the last couple of years, a lot of retail investors have participated in that, made some money, probably seen some losses also, but it's a very highly and speculative market, and we've seen prices go up probably 100% correction of around 50% or so. So, and again, it was need to really tax and regulate that in line with the other because it's cryptocurrency is more people view it as an investment alternative, right? More speculative, whereas the digital currency is more of a ease of doing transaction, right? That's what it will be. So I don't think people will really get impacted, and the tax will have an impact definitely because a 30% tax is probably indicating that government wants only serious investors, right, to who understand that market to really get into it, understand the risk and the pitfalls of cryptocurrencies. So to that extent, it dampen, but I think as investors, speculators will continue to look at as long as there is volatility in that space.
All right. Surcharge on long-term capital gains tax that has been capped at 15%. Do you think it'll benefit individual investors?
Well, I don't think that's going to matter much because it's just an incremental change over there. I think a lot of investors, okay, when they look at investing, it's not so much the tax rate, and surcharge is just an incremental tax over and above that. So I doubt whether that will really matter much when investors are making their investment decisions. I think it will be more driven by the outlook, okay, on the asset class, okay, or on say in the equity markets, what kind of returns they'll make, which will drive that decision. It's not really a meaningful cut, though it is good because all these cumulative taxes and surcharges were really adding up and taking up the tax rate much higher than the headline tax rate which was there. So in that sense, it's a welcome step, but I don't think it really changes the investor decision making.
Hmm. All right, but based on the announcement in the union budget, the string of announcements which have come by, which demographic of retail investors, in your opinion, stands to benefit the most?
Well, there's nothing really as such because normally when there are certain tax breaks or certain category of investors, okay, you give those benefits, it stimulates savings and then into investments, right? And benefits in that sense. I don't see anything in the budget really category. They are not change any kind of a tax structure for different categories of investors, and and the broader market, I think, growth, if it continues and becomes much more widespread, I think definitely. I think what we've seen is that in the last 2 years there has been a big increase in terms of the new investors or the penetration, okay, of retail investors has gone up, and that is a good sign in terms of deepening the financial markets and also the equity markets. And the way the budget, I think overall budget is still pro growth, I would say, and that will continue to drive economic growth for India to its potential growth rate of around 6.5%. So as that happens, what happens is that it becomes the growth becomes much more broad based. So it takes up every strata of the economy. While this pandemic has impacted a certain section of the economy, especially the non-salaried people and the self-employed and the small and medium enterprises, the government has tried to support some of those, right? The SME sector. But more importantly, the best way to do is to lift up the whole economy growth, right? Then it
Hmm.
percolates down to everyone. And then a lot of these small retail investors also, as the income level goes up, as the job creation improves, they would have more savings and to be able to invest in that sense. So I don't see any direct this thing, but by and large, as economic growth comes back and there are enough drivers towards that, both domestic as well as export-led growth, I think it will benefit all class of investors.
All right. And amid this growth push for the economy, what are the sectors that investors should keep an eye out in the wake of Budget 2022? Your thoughts on that?
So I think, if, as you know, the India's economy is slightly lagging behind the global growth. Last year, we saw a good rebound in global growth, US growth. India was still struggling a bit because we had the second wave, which was much more intense, and there was not enough support. But I think slowly and steadily, I think we are seeing a revival, and I think the domestic economy-led sectors, right, will be the best sectors to do well over the next 2 to 3 years, is what our belief is. And within that, if you look at the largest sector, which is the banking sector and the financial services sector, which is always benefits when the GDP growth starts to improve. And we expect overall, as the capital investments start to pick up, the overall credit growth, especially the corporate credit growth, will slowly pick up, and that will benefit the banking sector. Also, the whole NPA cycle is behind us, right? I mean, we've seen large NPAs in the last 2 years back. We're coming out of the COVID crisis, and most of the bank balance sheets are well capitalized. So the banking and financial services sector clearly looks to be benefiting from the revival in the economy, the revival in the credit growth, and lowering of the NPAs. Apart from that, as I said, the capital goods sector, right, the industrials, should benefit because of the increasing capex. The government in the budget, in the last budget, also there was a big focus on domestic manufacturing. We have seen the production linked incentive schemes being rolled out. I think those have been further strengthened in terms of number of areas, and some of the gray areas have been ironed out. So we see a slow and steady revival in the domestic private capital capex cycle, and the government is also doing its bit in terms of trying to put money into infrastructure and railways. So the industrials, capital goods sector, I think would see good order inflows in the coming years and should benefit out of that. The defense sector has also seen not a big allocation change, but more focus on domestic procurement, right, in the budget, and that domestic procurement ratio has been increased from 58% to 68%, and also domestic more focus on domestic R&D and outsourcing that. So the companies related to the defense sector should see that better domestic sourcing too in terms of order inflows. So I think, yeah, so these are some of the sectors, okay, which one would see benefit, not only with the budget, but even from a macroeconomic uplift, okay, which we see going forward.
Any thoughts on healthcare sector, especially as we head into a post-pandemic world? Any thoughts on that, Mahesh?
So the healthcare sector, I think there are two parts to it. One is the pharmaceutical sector, and one is the healthcare, which is the hospitals and the diagnostic space. I think that's a sector which is likely to see with good growth post pandemic. There's a large investments which still needs to be done on the healthcare side in hospitals, and I think while government can't do that, I think it's a private sector actually which needs to gear up to meet that demand. So that sector looks fairly strong in terms of long-term growth potential. Overall, the healthcare, I think, as health insurance and other areas gain more traction, you will see the pharmaceutical industry also benefit. I think it's been growing steadily in the last many decade at around 10% or so. But I think with greater focus on healthcare, on health insurance, I think this is a kind of a sector. Domestic pharma space is akin to a consumer sector, right, which is a steady secular growth. And I think the companies will continue to domestic pharma specifically, I would say, not so much export-oriented companies, will see a steady longer-term growth. Apart from the fact that there will be interims, this drug price control and price revisions, but that also impact is now getting neutralized to a large extent.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.